Hello, everyone. This is Julia de Sosa-Rocha, your trusted real estate advisor with XP Realty Julia and Associates team. And I've had a privilege of serving Atlanta metropolitan area for the last 22 years. And I've been working with different types of buyers, sellers, investors, relocating buyers, luxury buyers. So have seen it all through all these years. And today I have special guests with me. Bailey Schelter, who leads broker relations at Flock Homes, and Kara Svendson, exchange director at Flock Homes. So if you are a landlord who has built a rental portfolio over the years, you might be feeling the weight of the day-to-day, the tenants call, the maintenance, the management, but you also know that selling outright can mean a massive tax hit that eats into decades of equity you worked hard to build. Uh, that's exactly the problem Flock Homes set out to solve through something that is called a 721 exchange. Today, Bailey and Kara will walk us through what a 721 exchange is and how it actually works and who is really built for. So, if you ever thought, I love the equity, I just don't want to be a landlord anymore, this conversation is for you. Bailey and Kara, thank you so much for joining me today. And let's dive in. Please tell us a little bit about yourself and about your background.
Sure, I can go first. Hi, everyone. My name is Bailey Schelter. I've been in some form of real estate, whether it was a broker myself, development, tech, investing, for the better part of almost 14 years. And I've been at Flock Homes for 2 years now. Just to give you kind of a quick overview of my background in the field.
Great.
Thanks, Julie. I really appreciate you having us. My name is Kara Svendson. I'm an exchange director here with Flock. Similarly to Bailey, have been in the real estate industry in some capacity for the last about 13 years. Represented self-storage facility owners in the commercial world for a couple of years and have also sold houses for a builder for about a decade, and most recently have been a part of Flock's team here, assisting with acquisitions and the transition of active to passive real estate for owners like your clients for about a year and a half now.
Awesome. Okay, great. And for someone hearing about 721 exchange for the first time, how would you explain it in plain terms?
Yeah, great question. So the 721 exchange is a part of the US tax code. It's been a part of the US tax code since the 50s. It's just really been utilized by billionaires as well as like large institutional facilities. So it allows landlords to defer taxes, maintain cash flow and their equity in real estate, and also give up the headaches of owning and managing rental properties. So just to kind of quickly overview, you would trade your home for ownership shares into the Flock Fund. So what's the fund? The fund is comprised of nearly 1,800 homes across 17 states, and these homes remain as long-term rentals. We at Flock Homes, we manage the fund and we also manage the assets, the properties themselves. So you receive a portion of the rents and the equity of all the homes in the diversified fund relative to your ownership stake, but you get to give up all those headaches that come with ownership.
Awesome. Love it. And how is the 721 exchange different from a traditional sale and different from 1031 exchange that most people heard of?
Yeah, also a great question. So, yeah, like you mentioned, most people only know these two options when they're looking to exit, right? You can sell, but then you're faced with the capital gains hit.
Yes.
Or you can 1031 into another property, which just means more management, not less, right? this would be kind of that third option. Contribute the property into the fund in exchange for shares. You get the tax deferral, and you never have to fix a toilet or find a tenant again.
Yeah, 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 and you're not on that short time frame, because usually with 1031 exchange, it is a very short period of time, about 45 days plus minus. Yeah, and like when you need to buy another property.
That's a great point. There's the 45-day window and the 180-day closing. You also have to deal with a qualified intermediary. It's a much lengthier process and maybe more complicated as well.
Okay. So what does UPREIT structure mean? Can you please explain to us?
Yeah, absolutely. So UPREIT stands for the Umbrella Partnership Real Estate Investment Trust. And the concept is what Bailey had just mentioned. Essentially, it's a real estate owner that is trading their property for essentially operating partnership units or equity in a fund or in a portfolio. So it's basically the overarching name, if you will, for what the structure is of what we're doing here at Flock.
Got it. Okay, thank you for explaining. And please walk us through what a high level, what actually happens. At a high level, what actually happens when a homeowner contributes their properties. What do they receive in return?
Yeah, absolutely. So essentially, you would be receiving fair market value for the properties that you're looking to contribute into the portfolio. And when you do the exchange, you're ultimately exchanging those properties into the portfolio. They would be added to the portfolio, which we mentioned was about 1,800 or so properties today. In return, you receive equity in the form of those OP units, those operating partnership units, essentially a dollar amount that you now have invested in that larger portfolio.
Got it. Okay, understood. And who is an ideal candidate for 721 exchange? And what does that tied landlord look like in real life?
Yeah, absolutely. I think it can be a fit for many different kinds of owners. So admittedly, I think majority of our clients tend to be toward the end of their career. They may have spent 20, 30, 40 years building up a portfolio, building up, this net worth that they have spent an entire career developing, and essentially have gotten to a point where they're hitting retirement, or they're honestly just ready to be done with managing the properties, managing a property manager, and are looking for that next step. That tends to be a client that the Flock Exchange is a really great fit for, because as you start to look at those different options, as you and Bailey acknowledged earlier, the choices to exit are relatively limited, and they either come with a really large tax bill or not a true active to passive ownership structure. So typically, I would say that's the majority of our clients are the ones that are really looking to take that step back, a lot of times toward the end of their career, where they're just ready for that retirement piece and maybe even considering estate planning in the future. However, I should also mention that we have many clients who are also just very busy. They might still be working full time. They might have a family and kids. And maybe at the time that they decided to get into investment real estate, it made sense, but it's not the highest and best use of their time anymore. And they're looking to get some of that time back. That tends to also be a client that we work with regularly.
Yeah, or probably someone who relocated somewhere, yeah, and managing something from another state or another country was not convenient, yeah?
Absolutely.
Okay, got it. So does this work for someone with just one or two rental properties, or does it really only make sense for a larger portfolio scale?
The beauty of it is that it's a fit for anyone that's looking for that additional exit option, whether it's one property or whether it's 500 properties. At Flock, we've had the opportunity to help multiple owners with just one asset, right? They might be an accidental landlord. They originally purchased a property and lived in it, and then they got married and had the kids and decided to move into a larger property and turn the old one into a rental, and realized over time, that wasn't the appropriate fit for them. But then we've also had the opportunity to exchange, with portfolio owners who that was their entire career. They developed, 200, 300, 500 property portfolios, and we're looking for a really great and seamless seamless and easy exit. So truly, it can make sense for anyone within that realm, whether it's one property, 5 properties, or 500 properties.
Love it. Okay, great to know. And what role does estate planning play in why people choose this option, especially for owners thinking about how to pass this property to their heirs?
Yeah, I'd love to handle this one. The shares in the fund are fully transferable, and they're transferable to any heirs. Your heirs also receive a step up in basis. And then additionally, also, I think this is the really cool part. If you have multiple heirs, the shares can be split up and distributed however you'd like. And each heir can do what they'd like with those shares. If one wants to hold on to it, one wants to sell, one wants to, sell off a percentage and then let the rest keep rolling. They can really, truly kind of choose their own adventure, if you will. It's really a great tool, in my opinion, for building generational wealth, as well as leaving like a wonderful legacy behind for your family.
Yes, definitely it is.
Yeah.
So can you please walk us through the process from the first conversation to the closing? How does the process look like?
Absolutely. So typically in this realm, Julia, if you've had the opportunity to connect with one of your clients and give them the 721 exchange with Flock as a potential option, we would start off with what we consider to be like an introductory discovery type conversation. And the intent there is to align on what your client is looking to do, what their main goals are, what their main challenges are, and ultimately ensuring that Flock would be able to provide benefit to them in that regard. With this, typically goes hand in hand with an initial valuation of their property or their portfolio. So our investments team takes minimal information from the client. So there's not a huge outlay on your client's part in order for us to be able to provide an initial valuation range so they can ultimately get a feel for what sort of value they would be looking at for their properties or their portfolio immediately to ensure that, again, we're aligned and that it ultimately would make sense. As we go through that initial valuation, they'll learn more about the 721 exchange, about how it works, what it means for them as an owner, and also the parameters of their specific investment so that they can decide if it ultimately would be something that would make sense.
Okay. And how long the process take?
Yeah, the process from start to finish, I mean, it could be as quick as a few weeks to, probably 6 weeks on the longer end. So it's very, very quick for a real estate transaction, dependent upon how quickly, your client ultimately decides that the exchange makes sense for them. So after the initial valuation, we call it mutual due diligence, but we are open to providing any information or additional conversations with our C-suite executives, diving into the exchange, the tax, the numbers, as deep as possible, so that ultimately when your client decides that the exchange is the appropriate fit, they are ready to kind of take those next steps, which would essentially be due diligence on Flock's side. We start off with a range of value for the initial valuation, ultimately because we just don't know everything quite yet. Once we've aligned on the exchange making sense for your client, we would inspect the property in order to be able to provide final numbers so that your client could say, yes, it absolutely makes sense for me to exchange with Flock based on these final numbers, and ultimately be able to onboard and close on their properties and become a pro rata share owner of the fund.
Okay. Yeah, and probably the clients would want to consult with their, I don't know, attorney or CPA. Yeah, like just to make sure that they're going with the right decision. And I would probably highly recommend them to do so that like later on, like no regrets and clear understanding what they're getting themselves into.
Absolutely. And we really do recommend those conversations as well. We welcome having advisors on all of our calls. So if they have the opportunity to bring on their tax advisor or the opportunity to bring on their financial advisor, we think that it's incredibly beneficial for that conversation. It allows a third party to be able to vet what this investment would look like, to ask questions that maybe the owner isn't thinking of themselves, and sometimes get into more of the details related to the actual logistics of the exchange or how the tax piece works, especially when you're talking about a CPA. And we find that that makes it a much more streamlined and easy process for the owner to know that they've vetted it with people that they trust externally as well.
Yes, makes sense. So what does the due diligence process looks like on flocks, and what are you evaluating on the property?
Absolutely. So once we get to a point where it ultimately makes sense to proceed through due diligence of the property, there are a couple of items that we are looking for. One of the unique things about the exchange, especially in comparison to a sale or a 1031, is that Flock does take the property as is. So that means you don't have to kick out tenants. You don't have to align an exchange with when your tenants are potentially leaving, end of lease. Because of that, it does require that we have the opportunity to kind of vet what that looks like. So the first piece of the puzzle is documentation for the property: leases, rent rolls, maybe HOA information, ownership information. So if you own the property in an LLC versus if you own it in a trust. The intent here is for our team to be able to look through all of this information and ensure that there wouldn't be any reason why we wouldn't be able to take the property. So we just want to get ahead of all of that to make sure that as we're progressing through this mutual due diligence, that any red flags are being acknowledged and we're answering any questions along the way. Once that documentation has been reviewed and we know that there isn't any reason why the exchange wouldn't potentially work for your client, we would then schedule that inspection, where we do have a full property inspection completed. The intent of this is for our team to be able to get eyes on the entire property and be able to finalize that valuation based upon, true condition of, is there deferred maintenance? Have you recently renovated? We want to make sure that we're providing true fair market value for your clients, and that is the best way for us to be able to do so.
Okay, great. And once someone properties are contributed, or what does the ongoing communication or reporting looks like for the client?
Yeah, of course. We basically have on a quarterly basis our performance review information. So essentially, our CEO and founder will get on a Zoom call and he presents quarterly performance reviews. If you can't make that, we send that out as well to your email. You have a customer portal that you can log into at any time. That customer portal tracks your current equity balance, your returns, your current basis. It's also where you have the opportunity to opt in or out of cash flow that you want to take from the partnership, similar to what you probably see with your own bank account or advisory service if you're working with, a Charles Schwab, for example. Very similar to that. Additionally, our customer success team is available at any time. So we do have a team in place where if you have questions, if you have concerns, anything that might look like, there's a direct line for you to be able to reach out to a team that is designated specifically for that purpose. And on an annual basis, to take it one step further, we do also have all of our financials audited by KPMG, and those are always available to clients as well, even in advance of the exchange.
Okay, great. So now let's talk about the liquidity. If down the line, like someone needs to have access to cash, yeah. So what their options were after the initial hold period ends?
Yeah, absolutely. Great question. So essentially, when we complete your final valuation, and even with the initial valuation, you will learn what your hold period or lockup period would look like for your investment. That today ranges from 4 to 8 years, dependent upon the yield of the property or portfolio that you're contributing. But you would know that going into the conversation. Ultimately, once the hold period has lapsed, whether it's the 4 years or the 8 years, you do have full liquidity access at that point in time. So if you have a need for a large liquidity event, or even want to liquidate your entire account with Flock, you have the full opportunity to be able to do that. There aren't any sort of exit fees that you would need to take into consideration. The only consideration that you would have is that there is a requirement for a 180-day notice period for those larger disbursements. And ultimately, the intent of this period is to provide Flock Inc. as the GP of the fund the opportunity to right-size the appropriate way to fulfill that disbursement. As the fiduciary for all of the limited partners that are invested in Flock, we want to make sure that we are fulfilling any large disbursements appropriately. So that would be the only thing for clients to take into consideration, is that there's a little bit of a planning period that you would need to have in place in order to have a full liquidity or a larger liquidity event.
Perfect. Okay, thank you for explaining. Makes sense. So what fees and costs should the homeowner expect to see compared to what they would pay in traditional sale or a DST?
Yeah, I can take that one. So here at Flock, we charge a 6% onboarding fee, and that's for anything that you turn into the fund, and then an ongoing 1% asset management fee. Comparing that to a traditional sale where you would be paying commissions, obviously, but really what we're focusing on is you would be paying the, maybe 30% in capital gains and depreciation recapture. You again defer that. I actually work a lot. I've worked a lot with 1031 DSTs. With 1031 DSTs, you're still going to be going through the 1031 process. So there's going to be commissions involved there on the sell side. There's also going to be commissions and fees that you're going to pay to your qualified intermediary, usually somewhere around like $750 or $1,000. And then on top of that, you will typically pay about I believe it's about 8 to 10% on an onboarding fee with a DST. So obviously compared to Flock, we're a little bit lower. And then you do have the annual management fee for a DST as well. It's usually somewhere between 1% and 2% of your shares in the DST. So that would be, comparing apples to apples when we're looking at like the actual investment side of things, like as a fund, we are lower than another option like a DST. And then obviously comparing with all that tax deferral to an outright sale, you're still deferring all of those taxes.
Okay, that's great. So let's talk about like actual results. Or what do you hear the most from the clients after they've made this transition, and what surprises them?
Absolutely. I think what we tend to hear maybe immediately post-exchange is how simple the transaction was for them in comparison to real estate transactions they've done in the past. Not everyone, but a lot of our clients have been through multiple purchases, multiple sales, potentially 1031s, even more complicated type transactions throughout their real estate career. And they find that the exchange with Flock is one of the easiest and most streamlined exchanges, sales that they've ever gone through. So I would say that that is one of the pieces that we hear pretty frequently from a lot of real estate professionals, or even just the person who's only done a couple of transactions, that it tends to be really seamless and really easy. Additionally, on top of that, a little further down the line, I think what we tend to hear from clients is how much they enjoy the fact that they don't have to think about the real estate. And it really is dependent on the client. We want clients to be and owners to be as involved as they want to be. And we very much are open to any sort of feedback. For example, we've had clients who exchange properties that they live very close to, and they might do a drive-by and realize that the grass has gotten a little long, and they'll send our CEO and founder an email and say, hey, I think the grass has gotten a little long. Like, are you guys sure you're managing this appropriately? And we very much so welcome that type of information. But alternatively, we also have people who send us photos from everywhere across the world, basically saying, thank you so much for being who you are and doing what you've done for us, because now we've spent, the last month in Europe and we haven't had to deal with any sort of phone calls from a tenant or from a property manager. And it's just been so nice to have that completely taken off of our plate.
I can totally see how people can appreciate that part, especially. So for someone who has never heard about your company, Flock Homes, what would you point them to in order to build trust in this fund and the team behind it?
Definitely. I think there's a few different things for people to take into consideration, and it's likely dependent upon how they view any type of investment today. But I mentioned earlier that we definitely consider this to be a mutual due diligence process. It's unique, right? It's the start of a partnership. So we take that very seriously and we are incredibly transparent because of that. It's definitely not just cash exchanging hands. And even if you greatly dislike each other, you can go your separate ways. So we understand that at the start of the exchange is actually the very beginning of the relationship. Because of that, we are open to having conversations with any of our C-suite executives, inclusive of the founder and CEO. I think it tends to be very helpful to dive into a lot of the specifics about Flock, about taxes, about numbers, in order to be able to really get a feel for how we're running everything and how we're viewing acquisitions, what we're bringing into the fund, because ultimately that is what you would be invested in and how that's being managed on your behalf. Secondarily, I think the opportunity to review audited financials from day one and know that we've been working with very reputable businesses, essentially, sorry guys, essentially KPMG, to ensure that when we are talking about our financials, we're talking about our performance, that you know that that's been vetted by a third party that you can trust. And lastly, and I think one of the things that is incredibly helpful is the opportunity to talk to current clients. We are able to do client reference calls with people who have exchanged with Flock and who have been with Flock. And that's a perfect way to get a better understanding of why someone else chose to do it, how their experience has been, and truly be able to vet, Flock as an exit strategy and an investment strategy.
So, another question would be like if any agents are watching this video, and most likely, as the agents, we would have a question: how should we think about bringing this up with the client? And is this a replacement for a listing of their home or a complement to what we already do?
Yeah, absolutely. This is meant to be an added resource for agents, right? We just want to educate that there's this option that's out there that could be a very good solution and really solve all of the problems that your clients may have very seamlessly. So added resource for agents.
Right. And what is the best first step for homeowners watching this, or who is thinking they might be interested and this program will be a good fit for them?
Yeah, I would say call Julia. Call Julia. Julia and I have a great relationship. She has my contact information, and basically what we could do is kind of jump right into it, right? We would start with that initial evaluation. You would walk through that with Kara, see exactly what the numbers would look like for your specific scenario, right? Your portfolio, and then your goals also.
Okay. Great. And any final thoughts you want to leave viewers with about like how 721 exchange could change their relationships with their real estate?
Definitely. I think what we hear relatively frequently is that majority of owners have loved being invested in real estate, right? They did it on purpose. They've done it for many, many, many years. And although they have gotten to a point where they don't want to do it in the same capacity, the opportunity to continue to own a real estate portfolio that they are used to, as far as returns, as far as what they like to be invested in, the asset class that they're comfortable with, without having to deal with the liability, the time, and the costs associated with being an active owner, tends to be the best next step for anyone invested in real estate.
Okay, perfect. Okay, ladies, so I think like you've answered the majority of the questions that I had for now, and we could share a little bit about the program. So who is watching, thank you very much for joining us, for your interest. And Bailey and Kara, thank you very much for taking your time and for explaining how program works and breaking it down for us. And for the homeowners, like if you find this subject interesting and you have the property, or like one property or multiple properties that you think would be a good fit for this particular program, please reach out to me. I will connect you with Flock Homes representatives and we will get started. So thank you again, Bailey and Kara, and thank you for watching us.
Thanks.
You, Julia.
Okay, we'll be in touch.
Bye-bye.
Thank you.